And it's November 14, 2023, right here in Lagos, Nigeria. Good morning, good evening, wherever in the world you're watching from. It's Business Morning, coming to you live from Channels HQ right here in Lagos. Let's get to the top stories that set your agenda now. In just 3 days, the African Investment Forum has generated $34.82 billion in investors' interest for infrastructure, agriculture, health, and creative industry projects. The group president of the Africa Development Bank and chairperson of the Africa Investment Forum, Dr. Akinwumi Adesina, made this known in a statement at the end of a global event over the weekend. He highlights that the Africa Investment Forum is building a formidable powerhouse around investments that will deliver transformative impacts on the lives of people around the continent. The Africa Investment Forum, which is a multi-stakeholder platform, focus on continental deal-making and project facilitation between project sponsors, policymakers, and investors, has attracted nearly $180 billion in investment and interest since it was launched in 2018. And the federal government has affirmed its readiness to partner with Denmark in advancing to green energy for economic growth and environmental sustainability. The Minister of State for Environment, Dr. Isaac Salakron, made this known to journalists in Abuja following the outcome of a high-level meeting between Nigeria and Denmark on the green partnership and transition of economy, climate change adaptation, and the upcoming 2023 United Nations Climate Change Conference. On his part, Denmark's Minister of Development, Cooperation, and Global Climate Change Policy, Dan Jorgensen, commended the federal government for setting progressive goals for environmental growth and sustainability. And Nigeria has emerged as Africa's top crude oil producer in October. That's according to the latest report from the Organization of Petroleum Exporting Countries. In its monthly oil market report released yesterday, Nigeria's oil production figures, aside from condensate, production rose to 1.3 million barrels per day, placing it ahead of three other top African producers, Libya, Angola, and Algeria. Meanwhile, the OPEC report projects that the demand forecast for its crude in 2024 remains unchanged at 29.9 million barrels per day, which is an increase of 0.8 million barrels per day when compared to the level estimated for this year. And let's get a check on the global oil market now. We see oil prices quite steady this morning on expectations of a healthy market fundamentals following OPEC's report about demand, remaining strong. We see Brent futures gain 23 cents to $82.75 a barrel, while WTI crude futures climbed 21 cents to 0.27% at $78.47 a barrel. We'll drill down on drivers later on the show. Meanwhile, the United Arab Emirates has assured Nigerians that visa restriction on Nigeria will be lifted soon. The Emiratis ambassador to Nigeria, Mr. Salim Said Al-Shamsi, gave this assurance in response to the concerns raised by the Minister of the Federal Capital Territory, Mr. Nyesom Wike, during his courtesy visit to his office in Abuja. Take a listen.
Regarding the visa issue, and alhamdulillah, now we are working. The visa issue is not, I would say that the door is not closed, but it's not widely open. Yes. And we issue a lot of visa daily. We issue a lot of visa. And there is a lot of brothers and sisters here from Nigeria go to UAE and come back, alhamdulillah. Very easy access to get the visa. Takes a little bit of time, but there is no, a lot of people say there's not even one visa issue. No, there's a lot of visa issue daily. Alhamdulillah. And now we just trying to work with some specialized people here in Nigeria, my people, to put some procedures in between UAE and Nigeria and close some gaps, and this is actually, it's good for both countries, UAE and Nigeria too. And hopefully very soon we'll be hearing good news regarding this. Alhamdulillah. Regarding Emirates Airline, we work, I think, last couple of months very hard on it. And we move it up all the way to, from my side, I'm done with it. Now from the other side, we have small issue on only very small issue. Hopefully will be solved, inshallah, very soon.
Now to our first conversation. A survey conducted by SBM Intelligence, a Nigerian geopolitical intelligence platform, shows around half of Nigerian workers who earn the minimum wage in the country spend their entire income on food. Well, let's talk to the lady that put this report together now. Joining us is Sheyi Awojulugbe, a senior analyst at SBM Intelligence. Great to have you on the show.
Good morning.
Good morning. So, quite an interesting report there, and I keep saying it that, salary earners are not finding it easy at all at this time with currency devaluation, rising inflation. Walk us through findings in your report, because I see that most salary earners, minimum wage earners, spend it all on food, and in local parlance, they say man must whack. So, tell us more about your findings.
Thank you for having me on the show. So the report was conducted by SBM Intelligence as the second edition. The first edition was conducted, of the survey was conducted in 2019. And at the time, people identified food as a significant part of their spending. But by the time we went back to the field in this year, we found that across the country, on the average, people spend on the average of 97% of their income on food. And also we found that in regions like the Northeast, South, and in the Northwest, they reported spending above 100% of their income on food. And when we asked them that, how is this possible? The respondents who participated in the survey told us that they have cut back on other parts of their daily living. They've cut back on other responsibilities, and some of them, a significant portion, also told us that they've taken loans to augment their income.
Talking about taking loans, walk us through what salary earners are spending more on, at this time. I see you have food there as a major spend. Show me other things workers are spending on at this time.
Yes. So apart from food, which people identified as taking a chunk of their income, they also identified utilities such as rent and electricity bills as taking significant part of their income, and also healthcare and family needs are some of the things that rank high on the spending priorities of Nigerians at this time.
So you did say Nigerians are taking a lot of loans, at this time to augment, spending. But I know most of these loans are not cheap, especially from loan apps, because we know the interest rates are really, really high. What other sources are there for loans that most Nigerians are taking at this time?
So apart from the loan apps and bank loans, which the respondents identified as the major source of their loans, across the higher income category, people said that they've been taking loans from their friends, which also follows, because if you are earning a lot, then you would move in circles of people who can afford to give you a loan. And so apart from friends, people identified Esusu, which is the local thrift contribution, as a source of credit for them. And for people who identified that they were doing businesses, they said they take goods on credit from their suppliers.
Definitely, the loan apps. Talk to me about the loan apps, because I see that on the charts there, we see that the loan apps, bank and loan apps, there's about 50% when you check the sources of loans and credit. How can they afford this?
Well, it's. I don't think the question really is about affordability, especially when you consider that these loan apps and as we have them now, do not require collateral before taking it, and so month on month, people can easily go there and apply for a certain amount. And when we asked people that have they been able to pay back their loans, 81% of the respondents said they are paying back on a monthly basis. And so when they get income, they pay back. Or like some people who said that they take loans from other loan apps to set up loans from the previous loan apps that they have patronized. And so we had another 15% who said it's been difficult to repay their loans. And we had 4% of respondents who said they have already defaulted on their loans.
Looking at these loan apps at this time, does it mean that right now these loan apps definitely they seem to be making a lot of money, from this at this time? And I did see a report recently from the FCCPC that more loan apps were added or given approval, at this time. Talk to us about, because you tagged this report living dangerously, on credit. Talk to me about what this portends for, people that are taking these loans from these loan apps, and how dangerous it is, for the economy.
Yes, so what this report has shown is that food, which already, when we look at the NBS CPI, the CPI from the NBS, food already takes like a major chunk of the items that are weighed in computing the consumer price index, which measures inflation. And so when people are taking loans because they've spent a lot of their money on food and then they're taking loans to augment, it means that there needs to be something needs to be done urgently to address the situation, to bring down the prices of food, or to even offer respite to consumers. We also, as regards the loan apps, we've seen that it is brisk business, and especially from the Federal Consumer Protection Council that is having to deal with these loans and regulate them, especially given the shame practice that these loan companies have adopted in recovering their loans. So there needs to be something done across board. One, to check the prices of food, to check food inflation, to make sure that the prices are affordable, especially as we go into the December season with Christmas and the New Year celebrations, which already over the years we notice that food prices increase during this period because of increased demand. So of course, something needs to be done to check food prices, and also something needs to be done to check and monitor the practices of these loan apps, because we see that it's brisk business for them.
Quite risky taking on these loans, because you get the loan so easily, but when it's time to repay, you find out you're paying almost 50%, interest rates. Then you start looking for ways to pay off that loan. Then they start sending people messages, your friends, that you're a debtor at this time. All right, looking at the report, still, I see between 2019 and now, there are things that people could afford, salary earners could afford, but now are beyond their reach. Talk to us about these items.
Yeah, so when we were conducting this survey, we asked people if there were things they could afford between 2019, when the first edition of the survey was conducted, and 2023. And 67% said yes, there were things they could afford in 2019 and they could not afford now. Like you are showing on the chart now, 28% of them identified things that fell into family upkeep, things like paying school fees. People said they had to change schools in order to be able to keep up with affording the school fees of their children. Some said they mentioned some specific food items that they said they could afford to buy and they can no longer afford. Travel, fuel, entertainment. People said they had cut back on these things, and even charity, giving back. and savings, giving out to people, and then savings. They said that they've cut back on those things.
Cannot see investment there. So that means most of these people are not even looking at investments at this time.
Well, it's only one who has eaten that can think about investing.
Right. Quite incredible. Quite incredible. What do you think, the government can do, with this kind of data, that you've worked on at this time?
Well, the essence of putting out reports like this is to guide government decisions, especially at this critical time in the economy. We have seen how this report shows how the recent even and government action over the years since 2019 has affected the average Nigerian consumer. And so we hope that when implementing decisions or when implementing policies and palliatives for as a result of the subsidy removal and even the naira devaluation, when the government is implementing policies, we hope that this can serve as a guide so that they know which areas to target.
All right, so definitely, we're still expecting inflation data for October. That's coming out. We've seen a lot of forecasts about that. Some are forecasting about 30%. Looking at things right now, how much can the average consumer take, at this time, and what does it portend for businesses?
Well, the average consumer right now, the pockets of the average Nigerian is stretched. There's no need to mince words about it. The average Nigerian is stretched, and there is only so much a person can take. And so we hope that the government can offer respite to consumers. Again, like we were saying, hopefully, like in the report, we saw that the respondents in the Southeast recorded the highest decline in income. So this shows that the sit at home and all the insecurity problems that were happening in the Southeast definitely affected the consumer, the consumers. So when they're not able to get enough income, and when they're spending a significant portion of their income, or in some cases the entirety of their income on food, it means that businesses who specialize or work in areas that have to do with discretionary income, when you have taken away food, businesses who work in the entertainment sector and all of that can expect very little patronage at this time. And so we expect that as we go into the December season, although there will still be celebrations, but we expect that it will be at a lower level compared to previous years.
Yeah, definitely has a domino effect, at this time. Everything is affected, when consumer incomes are squeezed at this time. Thank you for this report, and we're definitely looking forward to a report on how businesses are also, coping at this time. Are they making any sales? We're looking out for that report. Thank you so much, Sheyi Awojulugbe, Senior Analyst at SBM Intelligence. Great having your perspective today.
Thank you.
All right, we'll take a break now. When we come back, commodities market update is next. Do stay with us. Welcome back. Well, it's inflation rate reporting season, and we have forecasts for inflation rate for October. Let's get a sense of what to expect. Joining us now is Oluwatomi Mayowa, Senior Analyst, Financial Derivatives Company. Great to have you on the show. Good morning.
Good morning, Ladi. Good to have you. Thank you. Thanks for having me.
All right, talk to me about the factors contributing to this projection here, about 1.08% increase. That's going to top at about almost 30% in October.
Yes,
talk to us about how you came about this number for this forecast.
Yeah, correct. We are estimating that Nigeria's headline inflation would increase by 1.08% to about 27.80% from in October, from 26.7 to in September. And before I go further into the analysis, I want to establish the fact that our estimate is actually based on Lagos market survey and our econometric model. So to some extent, it might be narrow in reflecting the general inflation level in Nigeria. And okay, having saying this, I would say what are the major drivers of inflation today? And looking at this, the biggest culprit is actually the exchange rate depreciation. That's the exchange rate pass-through. As of last year, we did some analysis about inflation factors or the drivers of inflation, and we found that the exchange rate depreciation accounts for about 70% of increase in inflation. So basically, we see that we've seen the naira actually, it depreciated to as low as 1,300 naira per dollar in October, before it started, appreciating after the CBN started to clear some backlog. So that's the major culprit. But what is more depressing is the increase in food inflation, the spike in food inflation. We're expecting, or we're estimating that food inflation would, increase to about 31.9%. And that is really, sad, disheartening, even in a time like this, because it's most consumers, their pockets are actually stressed, like the previous person has said. And why are we saying this? First, we look at the cross elasticity effect. Because of the exchange rate depreciation, we've actually seen the cost of imported commodities actually increase. And as a result of that, people are having to switch to local products. For example, wheat prices, because of the exchange rate depreciation, having to import wheat, is actually more expensive. And then we've seen that, push up the price of flour in the market. So that a bag of flour is selling for about 46,000 naira. As of last year, it was about probably 30,000 or 20 something thousand last year. So we are seeing people switch to local commodities, like for example, yam. Because a loaf of bread now sells for about 1,300 compared to 900 naira. So people are having to switch to local commodities. For example, yam actually increased, and because of that, that is also pushing the price of local commodities. For example, yam actually increased based on our survey by over 17% to about 3,500 naira per tuber. So it's actually good. Apart from all of this, we're also seeing logistic costs filter into prices. Diesel actually is selling for about 1,050 naira. That shows that those that are having to transport the commodities from the markets, from the farm gates to the market, are having to pay higher cost of transportation, transporting the cost. And then we have the poor road infrastructure. The state of Nigeria's road, has actually, it's worse than what it was before. And so we are seeing a lot of, breakdown of vehicles that are used to transport these commodities to the market. And most at the end of the day, these commodities actually waste, even where those vehicles actually break down. So all of these things are driving food inflation. And this is coming at a time where we are supposed to see the harvest period, filter into prices that will see a decline in food prices. But we're not seeing that, because of all that I've mentioned. So it's a difficult situation for Nigerians out there. And having said all of this, what are we saying? What's the outlook for inflation in Nigeria? By December, some analysts, project, for example, IMF projects that inflation, the year-end inflation for Nigeria will be about 30%. We have seen inflation, will continue to increase, but we see that the rate at which it will increase would actually taper. We're going to see less increase, compared to previous months. And why are we going to see this? Recently we've seen CBN, renew its monetary tightening policy, in the sense that it's now intensifying, its efforts to tighten monetary conditions. And before now, we've seen, the the intervention money, fueling to some extent, fueling exchange rates, instability in the forex market. So if now that we're now seeing that tightness in the money markets, where we saw Omo bill increase to about 17.9%, and we saw Treasury bill increase to over 16% also. So we are seeing that tight condition. So we
All right.
expect that the exchange rate depreciation would actually slow, and that would actually affect the inflation outlook also.
Yeah, we're definitely looking out for that because right now it's a double whammy of rising inflation and currency devaluation at this time. So looking at, the projection for inflation for December is about 30% for the forecast we're seeing. We're also seeing some strengthening when it comes to the forecast, for the Naira. How do you see this interplay by the end of the year?
Yeah, like that, that's why I said that, we're going to see a slower pace. The inflation will definitely increase because the when you compare the exchange rates now to looking at it year on year, when you compare the exchange rates, what it is now and what it was last year, definitely it's a depreciation. So year on year, inflation will continue to increase, but because the pace of depreciation in the exchange rate is now beginning to slow, that would also reflect in the pace of increase in inflation numbers. So although there are other factors, but considering the fact that I already said it's a larger, driver to some extent, a larger driver of inflation, so that would actually, and then it will also reflect in the monthly inflation. So we see a slower pace of monthly inflation increases. So that's why we're going to see that slower pace of increase in inflation.
What do you think should be the next play, for the CBN at this time? Is it still going to be policy tightening, at this time? Is that what the consensus is? And if it's is that the only weapon they have in their arsenal right now to tackle inflation? Is it just the rates?
Okay, first of all, I would say that it's the primary responsibility of the CBN to ensure price stability. I know last time we saw the intervention money trying to say you want to, boost growth, and because of that you are doling out money, which we saw that while they were tightening the monetary policy, raising MPR to about 18.75% per annum, we saw that monetary conditions were actually still loose. And that was why, because most of the policy or things that ought to be done to ensure that the interest rates, general interest rates, are well connected to the monetary policy rate were not done. So the monetary conditions were still loose. So right now we're going to see the CBN, tighten. In fact, they already started, like I mentioned earlier, that I think as our last 2 weeks or last week, if I'm not mistaken, they issued almost twice in a week. I think November 30th and October 30th and November 1st. So that we saw that, and then it reflected in the treasury bill market because of the tight liquidity. We saw interest rate increase to about over 16%. So because we are going to see less liquidity, we would see there will be less of that going into the exchange rate market, because most of the time that's when there's excess liquidity in the system, that usually reflects in the exchange rate market. Most people just go ahead to go and buy dollars because we already have high inflation, and the best they get value from is in the dollar. So once the liquidity is tight, to some extent it's to tame that depreciation in the exchange rates. So basically, like I said earlier on, the primary responsibility of the CBN is, is to ensure price stability, and the only tool they can use is their monetary. So it could be limited, but to some extent that would actually help inflation, especially from the demand side. So they just have the monetary policy tool in taming inflation. And also to add to it, the price stability involves general price level and the exchange rate management. So through auction, they can also mop up excess liquidity in the system by having a wholesale auction. That helps to mop up the excess naira in the liquidity in the system. So all of these things I believe that the MPC or the CBN will focus on this primary responsibility,
All
as
right.
we see the approach.
All right, let's get a check on the oil market now. We're seeing oil prices quite stable this morning, but we have good news. See, Nigeria's oil output topped in Africa for October. Talk to us about this and what it means going forward for Nigeria's oil production.
Okay, let me start by saying that first of all, we must know that markets, like according to a journalist in FT, says the market do overreact and later correct themselves. Earlier on, we saw that oil price rose to a high of $90 per barrel after the war started, the Israel-Hamas war started, and then we saw it later correct itself by going down to $80 per barrel, 80 around that range. And why we've seen that decline is because one, there's been less, investors are now beginning to say that there's less risk of the war escalating to Iran, who is a major supplier of oil. And then there's the weak demand recovery in China. I think as at this week or last week, the inflation, there was a deflation in China again, 2 times this year, so about 0.2% for October. So all of these things have, because of this slow demand recovery and probably slow demand also in US, that actually slowed down oil prices to about 80% per barrel. However, we saw some response from the OPEC trying to, they raised their forecasts for 2023, trying to reassure the markets that demand is still strong. And everybody knows that that's their, strategy to ensure that oil prices are high so that they can always benefit from that. So that's why we're saying that. Well, on the long term, short to long term, oil prices will remain elevated. We believe that oil prices will continue to trade above $80 per barrel. And why are we going to see this? Because we still have the OPEC cuts from Saudi Arabia and from Russia. And they already said that might be extended to 2024. And so that would actually lead to, we also expect global demand to recover in 2024 as interest rates hike, begin to, because we've seen some pause from the central banks. So that might actually affect we see global demand improve and then oil prices, increase.
Okay.
What does this mean for Nigeria? First of all, we know that oil accounts for about over 80% of our total exports. So definitely that would actually push up our external earnings, even though we know that some of our oil are actually in swaps. So it's difficult to estimate totally how it's really going to affect our external reserves. But however, on a theoretical basis, that should lead to an increase in our external earnings. But a downside to the price of fuel, because we know that that has been brought, the subsidy has been brought in quietly, and somebody is paying for that. So it's a whole lot right there.
Yeah, somebody's definitely paying for that. Thank you so much, Oluwatomi Maiwa, Senior Analyst, Financial Derivatives Company. Thank you.
Thank you very much, Larry.
All right, so we're drilling down on the oil markets. Now let's get on to the local bourse. Right now we have Willie Bong with the details for the NGX and fixed income market. Good morning, Will. I don't know if you were listening to the first conversation earlier, talking about the average minimum wage earner spending most of your income on food, about
That's 50% of income
on them.
on
And
food.
looking at the charts, they talk to us about what they spend on, family upkeep, food, fuel, business, savings. And I'm looking at that chart, and I don't see investment in that. And she did say, how do you invest when you've not eaten?
Yes, a hungry man would only be thinking of his stomach.
Right.
And right now, Nigeria is more like the middle belt crisis. This is the middle belt, laddie. We have to settle the middle belt first before you think of anything else. And if there's a crisis there, you can't even think of investment. And it's more like, you look at it, it's more like an analogy, or think of how it is Nigeria as a whole. Nigeria, it's more like we have a crisis. We have a crisis of GDP growth, economy. We have a lot of headwinds. So if the economy, if the ground issues or the root problems are not solved, how can we see growth? How do you think of investments? How do you think of attracting investors?
I'm wondering how that's going to impact the NGX at this time. We're trying to, attract more investors into the NGX.
Yes, we're trying to attract
get
more
some liquidity.
We're trying to get more liquidity.
Not some people can't even eat.
Yes, they can't even eat, and we're trying. And even if right now that the domestic players dominate the equities market, still you still find that a lot more people that are in the grassroots that ought to be playing in the equities market to enhance their income can't even do that, because all they think about is what they're going to eat the very next minute.
Right.
They might have breakfast, but they might not have lunch. So if someone is going to be paying for the subsidy somewhere that we don't even know about, the oil price, let someone start paying for the food that the ordinary average Nigerian is going to eat. Because right now, if the food issue, and FDC is projecting inflation to go to like 27.8%,
and we still have 30% for December.
We still have 30% for projection for December.
Right.
What will the average Nigerian be doing?
You know what I'm going to do? I'm going to fast and I'm going to invest.
Oh,
I don't know.
You want to fast? You want to fast?
I'll fast.
Something has to give way, right?
Something has to give.
You fast and invest. I like that, laddie. Please fast for Nigeria. Fast for the investors. So we've just seen the equities markets kicking off negatively. It looks like it's just rubbing off somewhere. Late sell-offs in Boa Cement. Profit taking has to kick in when there's an uptick in yields. So we're looking at that outweigh the gains in MTN Nigeria, which was up about 2.6% yesterday. The NGX ASI declined yesterday by 0.33%. Market cap is at 38.795 trillion naira. We had about 130 billion naira shift off the market cap, but month to date is still doing well, still at the 2% levels. Now let's look at the activity chart yesterday. We're looking at the top in the sectors. We see banking up yesterday, 0.38%, was a sole gainer in yesterday's trading transaction. We see consumer goods down yesterday, industrial goods, Boa Cement brought this down, insurance also down, oil and gas, and all down in yesterday's trading session. But Fidelity Bank was the most traded stock by volume yesterday, and we saw MTN topping the value chart. Now let's bring in Rotimi Fakayojo. He is a capital market analyst. He's going to give us more insights. He's going to break down the perspective that investors should be looking at this moment now, and that 50% of Nigerians spend average of their salaries on food. Maybe there'll be a light at the end of the tunnel. Good morning, Rotimi. It's good to have you on the program.
Good morning. A pleasure.
It's good to have you. Now, we're seeing, things are happening in Nigeria right now. A lot is happening, and we wish more people could invest more, but they're unable to. But let's quickly look at the bond auction yesterday. The DMO is borrowing aggressively now. We're seeing 18% stop rates for the 30-year paper, and all the other stop rates for the other tenors also rose as well. And we're expecting inflation data tomorrow with a projection of 27.5%. How is this looking for equities? How is this looking for the markets? Can you give us a breakdown?
Well, definitely it may not really look well on the onset, but for shrewd investors that do more of portfolio mix than diversionary investment at any point in time. What I mean by diversionary investment is leaving an entire investment window for another because of the supposed immediate higher yield. I believe strongly that we should have more of portfolio mix than just concentrating on one investment window. So, but for this, as it were right now, definitely with the inflation figures coming up very shortly, we might see an immediate impact on the equity market, and that impact definitely will be negative, which had started yesterday. But more so as that may be, I believe shrewd investors definitely will maintain a good portfolio mix such that the returns from equity and returns from fixed income, at least they will still stay side by side, and they will take advantage of both investment windows. So for me, I believe that there shouldn't be much as impact on the equity market because one, you're going to have dividend yield. Two, you are going to have capital growth over the years. And 6 years from now, if you look at investment in about 3 years ago or 2 years ago, or even this year, when you look at the yield that the capital growth that such stocks had, definitely it surpasses what the fixed income may give in the next 4 years. So I still believe that some investors should actually take advantage of this new rate for the fixed income, for the bonds, and at the same time, glue to what they already have in the equity market.
A fantastic investment plan there. Know how to rebalance your portfolios, know how to mix it so you have a bit of equities and you have a bit of fixed income bonds, so you're not losing out on any one of them, on any of the yields there. But, I just want to still chip this in, how many average Nigerians there, the greater masses, can invest in these hard times. But we're seeing C&I Leasing, that's the maritime company, proposing a bonus issue of 2 for 3 ordinary shares to shareholders whose names appear on the register of members at the close of business. That's looking at January next year in 2024. What does this mean? What are they trying to attract here? They're trying to, see capital appreciation, they get more of their shares out there just to limit what they have, in their reserve.
Well, I think it's good for the investors in the short run if they continue to keep faith in the company for the future. But at the same time, also, with this increase in the number of shares in issue, it definitely will impact on the quantum of dividend they're going to pay subsequently. Because with more shares for you to cater for, definitely is going to have much more impact on your payout. So, but good as it is, this is a period whereby companies are no more issuing bonus to their shareholders. But as we have it right now coming from C&I Leasing, I believe it's a good one. Investors always love bonus because it leads to enlargement of shares of their shares, and at the same time it gives them an opportunity. If they have to sell in the future, they can sell part of it and still retain the quantum of shares that they have before the bonus issue was actually approved. So I think is a good one coming from C&I Leasing, and we are not seeing any trace of dividend being paid for the same period of year. So, but good as it is, I think investors will still be very much happy about that.
It's good to know that investors will be happy, but let's just know if we'll be happy at the close of business. So we're going to close bullish or bearish. Can you just give us in one sentence? We're looking at the fact that you mentioned that we're in a correction mode. Some analysts have said it's going to be short-lived, but what is your take on it, and do you see us closing in a positive today?
Well, I think what impacted on the market negatively yesterday was actually Boa Cement. We know fully well that Boa Cement has about 35 billion shares in issue. When you multiply that by the naira value that it dropped yesterday, that is giving us close to 300 billion naira loss to the market capitalization. So I think we may not have a repeat of that today, and there's every likelihood that we may see an uptick in some other securities. So there's every likelihood that maybe the results coming from C&I Leasing may be an impulse for investors to actually take more position today. So I believe that we will not end as we did yesterday, except for any major shake-up in any of the highly capitalized stocks. So I'm very optimistic that we may have a reverse of what happened yesterday. That is the market closing positively today as against negative yesterday.
We'll hold on to your optimism. We share your optimism, Mr. Rotimi Fakayejo. Thank you so much for coming us and joining us on Business Morning.
Yeah, you're welcome.
So, Ladi, I want to share his optimism. He's quite optimistic.
Yeah.
He's one of those investors that see the good in Nigeria and see the positives, in the policies, direction, and hoping that, the outcome will be better for all.
Yeah, and I'm also positive too, and I believe the best is still ahead. Thank you so much.
Ladi.
Well, thank you. Give those details there from the NGX and fixed income market. Let's get a check on what's happening on the UK now. We have Juliana joining us from our London studio. Good morning, Juliana, or via Zoom, I think. Well, great to have you, Juliana. So we see Prime Minister Rishi Sunak has fired his divisive Home Secretary, Suella Braverman, and named Mr. Cameron, former Prime Minister's Foreign Secretary. How's this being received over there?
Good morning, Laddie. What an extraordinary day it was in British politics yesterday with, of course, number 10 Downing Street being the heart of the politicking. I suppose we should start with the first bit of news that we got 24 hours ago, which was, as you quite rightly said, the Home Secretary, or the former Home Secretary, Suella Braverman, being sacked by Rishi Sunak. I don't think that was the most surprising development of yesterday's reshuffle, because lots of people were suggesting that was going to happen many weeks beforehand. We know that the two individuals didn't see eye to eye, and of course, as you said, she was very, very divisive. Some of her rhetoric and language that she was used, I think, was wanted by certain sectors of the Conservative Party, as well as people here in Britain talking about stopping the boats and really demonising some of the protesters that are in support of the Palestinians. But I think what took it a step too far was some quite bizarre comments that Suella Braverman made about people who are homeless living on the streets of the United Kingdom. I think she said it was a lifestyle choice. According to insiders, that was the tip of the edge for Prime Minister Rishi Sunak. So she is out. I think she is likely to cause the Prime Minister some trouble. There are some suggestions that perhaps she is considering a leadership bid, which is going to be interesting as we head into the next general election. She, of course, has been replaced by James Cleverly, who was the former Foreign Secretary. He now has a really difficult task of trying to sort out the issues we have with policing in this country, trying to sort out the issues we have with immigration. So that was the first headline. But of course, the one that everybody's talking about, that's on the cover of all the British newspapers here in the UK, is the return of the former Prime Minister, former Conservative winning Prime Minister, Lord David Cameron. He is now the former Foreign Secretary. In fact, he is now the Foreign Secretary. Just a couple of minutes ago, he walked back into number 10 because there is now a cabinet meeting ongoing with the Prime Minister and new members of his cabinet. And you know, this is completely unprecedented. And I was saying yesterday on air that, you know, I'm using the terms like shocking and unprecedented to describe the political arena of British politics at the moment. But this certainly is one of the ones right at the top. I don't think anybody was expecting this, which is quite surprising, because we know that having been in power for 13 years, the leadership of the Conservative Party are very chummy with the British press. So typically we're used to hearing leaks a few hours or a few days before. Nobody knew this. Only a handful of very senior staff in Downing Street and Buckingham Palace were aware. And, you know, it is going to be a political gamble for Rishi Sunak. I think most people realise the reason why he's doing this is because he needs a strong statesman abroad to try and lay out Britain's foreign policy. Of course, we've got two major wars ongoing at the moment, Israel versus Hamas and the war in Ukraine. Rishi Sunak understands that if he is serious about winning the next general election, he's got to focus on more domestic issues. And these are the domestic issues that we've been speaking about almost every day on your show, Laddie, which is, of course, the cost of living crisis, high inflation, stagnated growth. With so many issues taking place across the world, Rishi Sunak cannot be everywhere. He's got to focus on his domestic policy. And I think he believes having somebody like Lord David Cameron with an enviable contact list around the world is going to afford him the opportunity to do that. But of course, it does come with major issues and challenges, one of them being the fact that, you know, David Cameron is no longer a member of Parliament. He was appointed a peerage, so he now is a Lord sitting in the House of Lords, but then that also means that MPs across the benches cannot scrutinise him. So lots is going to come out in the wash due to these decisions. You know, the Labour Party is still 20 points ahead of the Conservatives in the election. So if there was a general election tomorrow, by far Sir Keir Starmer would win. But now that he's pulled this shocking card out, we shall have to wait and see how it progresses. But certainly, I think nobody expected on a windy Monday morning, after 7 years in political exile, for Lord David Cameron to be around the cabinet table again. We've got 2 PMs in number 10 as we speak.
Quite interesting. Definitely a lot happening with UK politics at this time. We'll drill down on how the market is going to react later on Business Incorporated. Thank you so much for coming on, Juliana.
Sladdy.
All right, now let's take a look at what's happening with all the markets now. Quickly, we see Bitcoin there remained trying to attempt that 37,500 level, but we see it's mostly red. The color is what we have in the markets right now. Bitcoin, $36,699. Pockets of green with Ethereum managing to stay in the green this morning. XRP also in the green. I will see Matic firmly deeper in green territory this morning. Let's look at these sentiments right now. What do we have? We'll see what's greed yesterday and still greed today. 69 points of 100. Let's look at the top cryptocurrencies we tracked. Now we see Bitcoin holding on strong this morning, still above that 37,000 level, looking at support and resistance zones. If we look at other cryptocurrencies we track now, we see BNB there, $244, down 0.59%. A big drop for Cardano, 3.33%. XRP, 1.55%. All right, let's look at another slide now, talking about cryptocurrency job growth outpacing cryptocurrency price action. We got that from Glassnode there. So we see the chart here, related job openings, Bitcoin price in USD. So that's the green there, showing job openings outpacing this line, which is price action for Bitcoin and all the cryptocurrencies. So we'll see right there, 1.77 million jobs created there for the cryptocurrency market, outpacing price action at this time. Let's bring in Gilbert Jokpata now to bring us up to speed and tell us how this works. Good to have you, Gilbert. Good morning.
Good morning, Mr. Ladi. Great to be here.
Fantastic. So we see the chart there showing us that Bitcoin job growth has outpaced price action. Paint a picture for us. How many jobs is the crypto industry creating at this time?
Okay, the data from Glassnode turned out to be true, but it's been this way since 2021. And Mr. Ladi, I don't know if you also know that job opening also related to Bitcoin has also outpaced the wider technology industry as well. And this is actually a great thing. If you look at if you look at what's happening with that, LinkedIn also made a report that shows that job description from the cryptocurrency markets, which is Bitcoin in particular, have increased by 395%. And this isn't just the case. The data also proved that the Bitcoin job has doubled that of the technology industry. And this is quite a good thing for investors, because beyond price, I know traders always look at price, but investors want to understand that they are investing in an organization or investing in a business. And yes, Bitcoin is beyond price. It's a decentralized autonomous organization that incentivizes everyone who is working to keep it afloat. And there are a couple of reasons why we are seeing this increase in job opening related to Bitcoin. One is mainstream acceptance. Bitcoin has moved to a point where it's been accepted by many businesses. And the second thing is actually technology is evolving. New apps are being built on the technology, which is also attracting investors, attracting more persons to do business also on the ecosystem. And I think that the third most important thing is, I think, is more shortage of talent. You know, the cryptocurrency space is relatively young, and this way means that there are less skilled person available also with experience. And this is not just causing an increase in related to jobs opening with Bitcoin, is also leading to increase in salary. That is why those who work in this ecosystem or industries are being paid handsomely well. You could see demands increase. Demands are coming from software engineers, front-end engineers, back-end engineers, technology architects, even blockchain developers, smart contract developers, security engineers, data scientists, product managers, marketing managers, sales representative, business development. And personally, I will have to tell you, because of Bitcoin is why I have a career, why I have a name, and why I also earn also from the marketplace. So Nigerians who are also watching, who are thinking of moving into technology, especially in the cryptocurrency space, this is your opportunity. There is shortage of talent, and this is why you could easily make a name for yourself with your skills. So this is the right time, those who are thinking of getting started with technology, especially the cryptocurrency market. This is the right time for you to get into the game.
Quite interesting. You heard it from Gilbert there. It says the salary expectations are quite impressive in the crypto industry if you're looking for a job there. Thank you so much, Gilbert Jopata. Always great having your perspective.
Yeah, it's my pleasure. Thanks for having me.
Yeah. So yeah, that's how the market is looking. Talking about the crypto market, is still a greedy market right now, but we're seeing pockets of pullbacks right here, and we see the local boss still, ramming on in positive territory. So that's a wrap on the program today. Thank you for watching. You can join us again on Business Incorporated for more updates and developments in the world of business. And for other updates, you can go to www.channelcv.com. Thank you for watching. I'm Ladi Williams. Enjoy your day.